good morning. You're watching ET Now. I'm Anisha Jain. With me is Nikunj Dalmia. It's the start of a fresh new day, week and a year in case of today. And it's a happy new year that we want to wish from the ET Now family to all our viewers. May 2024 be bigger, better and brighter for all of you. Talking about brighter, we are here in the ET Now studios bright and early. Come rain or New Year's Eve, in that case, we are here to make sure that your year and the day is profitable going forward. But talking about New Year's, Nikunj, first up, Happy New Year to you formally.
Thank you, Nisha.
What were you doing on the New Year's Eve?
Just friends, family. Duty calls, wrapped up with friends early. So
talk to me about duty calls, right? But okay, it's cliched, but any New Year resolutions?
45 साल में नहीं कर आप क्या करेंगे? I'm 45 years old. If I had to do it,
reinvent yourself any given day, right?
Exactly. And my point is that why wait for New Year's to start something good? And if you have something good, well, you shouldn't have waited for 1st of Jan 2024. So yeah, year has changed, and 2023 has just been it has just zipped through.
Yes.
Just zipped through because the markets kept us busy. The bull market was alive and kicking. We've seen the kind of vibrancy what we've seen in 2023 in mid-cap stocks, small-cap stocks, in SME stocks, in the new IPO market, come back in the startup or the new tech companies, linear rise in PSUs. I guess that kind of a feat is not going to be repeated in 2024. 2024 could be a very different year, both in terms of volatility and also in terms of price action. Well, in the near term, because of flows, because of liquidity, because of what the positioning is, the markets may just not reverse, but you can really make a case, and I think there's logic in that case, that 2023 is unlikely to repeat itself in 2024. I mean, you got to fasten your seatbelts, you got to prepare for low returns, you got to prepare for a lot of volatility. Not one but 40 big democracies are going for elections. A lot of time base effect would kick in. Markets exactly are not very cheap. So I think for me the differentiation in 2023 versus 2024, I guess, was if luck was the variable factor in 2023, I think skill would be the deciding factor in 2024.
Okay, there is a business case that 2024 is not going to be as easy that 2023 looked like. But Nikunj, what's the business case of having the markets open? I mean, me and the entire team was struggling to find any market which is open right now today on Jan 1st.
And none of the major markets are actually operating. And this is what I always say, why? Why us and why every year? Why us and why every year? I mean, you're talking about India becoming a global superpower. You're talking about, India on course to become a $5 trillion economy very soon. You're talking about Indian markets which are right up there in terms of, I think, the fifth or the sixth market in terms of market cap. There is serious globalization which has already happened. So by just keeping the market up on 1st of Jan, and when, half the folks will not be there, half the folks will come, they'll be wearing sunglasses. It was a long weekend, and I think markets would have benefited with. Market should always get 1st of Jan as a off. And I think that's my personal view. I mean, ultimately the regulator and the exchanges have to decide on it. But I think aana hai to aana padega, but makes little sense.
Well, if anyone at SEBI, BSE and NSE are listening to us, please take this request on board. I mean, right from the US market, the mother market, to everyone in Asia, right from China, Hong Kong, South Korea. I wanted to read out the rates for you of how these markets have opened, but all of them are shut today. So we have nothing to talk about until 9 a.m. until unless we get our own markets open. But of course, it's the start of the fresh new year. So let's talk about new targets that are being set, and not only for you and me personally, but what are the Nifty targets a lot of brokerage houses have, put out. You have to take them with a pinch of salt, because obviously in 2023, what they started the year with was very different versus how we ended the year. But nonetheless, to put it on board, there are expectations right from 21,800, which was just scaled last week, to as much as 23,200 on the upside. So definitely it looks like, Nikunj, there is still some kind of returns that they're expecting, and nobody's expecting a big decline of sorts. So it's going to be a positive year despite the 8 consecutive years of returns that we have seen.
So Nisha, I think what we need to debate this year is that what could be the quantum of return. I don't think you can make a case for a negative return purely based on the earnings setup, purely based on valuations and large cap stocks, or purely looking at where the where the economy is headed. What you need to perhaps argue is that just when we thought that 2023 would be a flat year for large cap stocks. You had a brilliant November and a solid December, and suddenly the Nifty for the year gone by give you a 20% return. So historically, I guess forecasting is not the best way, or January forecast numbers rarely actually form in line with what the real picture by the year end is. Nobody forecasted even for large cap stocks, small and mid cap. I'm not even getting there at beginning of 2023 that it would pan out in such a manner, because nobody expected the Fed would pivot. Nobody expected that crude will collapse. Nobody expected that such a large reversal will happen in terms of global liquidity as well. So there are a lot of factors which were at play, which nobody was anticipating and expecting, and which in a sense really gave the fillip to the market. So I think while the year-end targets which have come out so far, and this is not the full catalog, the catalog will keep on increasing up as folks return to work. I think the message from brokerages, whether it's Citi, Nomura or Goldman Sachs, is that we could be in for a flat year with a mild positive bias. That's the general view. And I think more than looking at the Nifty, it really would be about a lot of stocks. Anisha, I look at the market in a very different prism in 2024. Look, 85% of the market, or 80 to 85% of the market in 2023, I think went up. The market's really obliged you. As long as you participated, you did not try to time the market. If you stayed on the course, I guess you were very handsomely rewarded. I think the reverse could happen this time, which is that 20% of the market will actually give you breathtaking returns or solid returns. In mid and small cap stocks, the ratio must be more than 80%. In mid cap stocks, the ratio was more than 70%. In Nifty, the ratio was more than 50%. I guess it really could be the reversal, which is 25 to 30% of the small and the mid cap stocks have real potential to give you double digit returns. Barring that, I expect a lot of other stocks to either have a flat year or have a downward year. Now specifically, let's talk about Jan, Nisha, because that's what our viewers would like to understand. Now the January data, unfortunately, is not something which could be called as it has supported the bulls. 7 out of 10 times Nifty has given no returns. It has given negative returns. 6 out of 10 times the small and the mid cap index has given no returns. The seasonality, I guess, is also applicable in banks, where Nifty PSU bank 7 out of 10 years has not given you returns. Bank Nifty 5 out of 5. It's like a toss of coin. So if data is anything to go by, I guess the month of Jan may just be a dull month. What you would ask yourself is that will this entire Happy Diwali rally extend to become a grand 2024 welcome rally? I have my reservations, and I'll tell you why. A, the seasonality is indicating that. B, you must also realize that the market movement has been a linear one, and this will get challenged because I don't expect the earnings season is going to be that gangbusters. There is evidence of slowdown which has happened in consumer space. I've been told that the online sales in December have not been that strong, and you can really feel the pinch that the consumer is slowing down. So I think markets have run up way ahead of what the earning recovery could be. Everybody is betting on the fact that FIs will come, so it's becoming more like a one-trick pony. So that for me is the setup. Seasonality is against you. FIs, I don't know whether they will come back or not. If they come back, we'll welcome them. But markets are too much dependent on them. And then I think earning season is not going to be that grand that it will really lift the markets higher. These are the 3 factors I would like to point out.
Okay, so Jan, keep your seat belts tightened up, because that could be a bit of a topsy-turvy ride. But at least for 2024, things are in place that talk to you about the positivity that is there, and more importantly, you also need to factor in the kind of cues which are lined up for this year. Churn is going to be the big talking point in terms of from mid-cap, small cap to large caps and the individual stocks as well. But talking about 2024, the cues that we want to put on board, the first big cue to watch out for, of course, is the Indian general elections, which will be there during the mid of the year. The rate reversal cycle is another important factor to watch out for this year, because this is the year which has been pegged that we'll see the start of the interest rate reversal. So let's see whether that happens or not. India is going to be included in the global bond index, so that is something to watch out for, and the flows on account of that in the bond market. And as we were talking about, over 40 countries are going to go for election, the large ones being US as well this year, wherein at the end of the year there will be presidential elections. But talking about the cues for this week or this month perhaps, auto sales, of course, today itself we'll get the data, so let's watch out whether that consumption slowdown is something that is visible in the auto trends or not. Fed minutes is something that we expect on Jan 4th, so the course of future trajectory will be more clearer after we read into that. Run up to the earnings, IT sector will kickstart the earnings next week, Jan 11th. Perhaps it's going to be a muted start. Let's see where we go from there. And of course, Jan seasonality that we have talked about is going to play a big factor in the markets in this month. But let's get you some expert voices as well as to what they make out what is going to be the trend for 2024. Hiren Ved likes the ER&D space along with luxury consumption. He also shares a list of stocks he has placed his bets on from these sectors. Listen in.
For couple of years now, we've been bullish on the ER&D space. So, KPIT, Tata Elxsi, Dynamatic Technologies. We've been holding it for 15 years now, right? It was a micro cap, and now it's a small cap. We hope at some point in time it will become a mid cap and grow. But I think the inflection point has come. We also participated in, it's another theme that we like quite a bit, which is luxury consumption, right? So we have exposure to stocks like Ethos and KDDL, which is the parent company, which we've been holding for a while, been quite bullish on it for a while. These are still small cap stocks. I think that we continue to hold that. We don't, small cap investing is also a long-term game, right? So you really have to stay invested in many of these companies for years together. I mean, Varun Beverages was a mid-cap when we invested in it. It's now become a large-cap company. After a long time, you had an IPO come from the Tata stable. And for us, we were happy because we had exposure to Tata Elxsi, which, by the way, I feel is a far superior business. Both KPIT and Elxsi are superior businesses to Tata Technologies. Not to take away anything from the potential of Tata Technologies or the quality of the business, but I think, the margins tell you the story, the growth tells you the story, right? But I think over time, people will realize that KPIT and Elxsi are far superior companies than Tata Technologies.
Okay, a lot of those stock ideas coming in from Hiren Ved. That's what they hold in their portfolio. But time now to welcome our chartists on board. Naresh Mirani and Kunal Bothra, as always, are with us on the show. Naresh, hi, Happy New Year. What was the New Year Eves like for you?
So as usual, family and a lot more relaxed evening. So in terms of markets, this is an interesting time because we get into seasonality of January. We've had some of the worst tops in January. So we look out for something like a much meeker top, unlike what has happened before. So overall, the bias remains positive. Continue to ride on to the trend, book some partial profits on the index. And then a new range, a new base is around the 21,200, 400 mark. So overall bias is positive.
Duresh, Anisha asked you Happy New Year and you've given a market answer.
So
some dedication.
Totally.
And Duresh is smiling today. New Year resolution.
Yes.
But I like it how markets is the only thing on your mind. I asked you what was New Year's Eve like, but he's like, okay, in terms of the market, this is what I expect.
No, I think I got a message also from Naresh. New Year Eve, I opened the message, it was a chart check. Nothing on, New Year greetings or changing pleasantries. Right, Naresh, what time did I get this message? Let me see.
No, I don't send the messages on New Year.
Yeah, so I got
So do you send targets?
Yesterday, yeah, there you go. 144, last message from Naresh on my WhatsApp to chart. Nothing about Happy New Year, nothing about resolution, right, Naresh?
Nothing.
Sunday भी काम कर रहे थे.
New Year resolutions don't work, so.
When people ask me this, I was telling Anisha that 45 साल में नहीं करा तो अब क्या करेंगे? I'm 45 years old. I mean, I should have done it earlier if I wanted to do it. चलो भाई कुणाल. Let's talk.
Yeah.
What are we doing?
So I think in terms of...
I don't know what are we doing. That's a big question.
I was actually waiting for the second part of the question.
What are we doing here?
We have become the 5th largest market in the world in terms of market cap. We are talking about India becoming more and more globally aligned. Can you name one market which is open today? It's a quiz.
Yeah, that's a quiz we should do.
Naresh, can you name one market which is open today?
I think none, and it has been the case forever.
See, one market open today is India. That's easy, right?
Yeah.
Which is the second market which is open today. Now that's the tough one. See,
No idea.
Google bhi nahi bata raha. Even Google has failed in the morning.
It
Even AI
actually
is not
did.
failing.
It actually failed in the morning, and then it was only throwing the list of the economies and the markets which are shut. So I don't know. I think we should really put it out as a Twitter quiz on our ET Now hand class too. If they can come out with an answer, that will be great. Because I think Bermuda or something. Our producer was pointing out is one of the places that were perhaps open, but nothing else. Okay, but nonetheless, we have to deal with our market. So let's accept that as a reality. But Kunal, what are the levels that you watch? And I think we're twinning at least in the yellow. Yellow today, I think hopefully we're
all
talking about
yellow
the...
and shades of blue today, Anisha.
Yeah,
There's
actually,
nothing.
it's yellow, blue, blue, and then yellow. Great. And then blue again. So interesting. But nonetheless, so what is your take on the markets? What targets you have for yourself and the Nifty for 2024?
Yeah, no targets for myself, but yeah, just keep doing what I think we've been doing since the second half of 2023 specifically. So we hope that
No target for Tata Motors also.
it's already 800 now. So I mean, what more? But I think it's been a fantastic last 3-4 months for the market specifically. I think it's just been a cherry on the top of the cake, frankly, because the last 3 months we've seen almost a 3,000 point rally for the index, ending the year 2023 on such a high note. We've seen phenomenal sector rotation in the last 3-4 months also. I think right from the likes of high beta sectors like real estate, small cap, mid caps, towards even the likes of pharma, FMCG, where many of these sectors have made a comeback over the last couple of months specifically. So I think it's been a fabulous sector rotation as well in the last 3-4 months. We can expect, so of course we all understand that after such a kind of a steep rally, the markets are bound to take some bit of profit booking or go into a bit of a time-wise consolidation. That's a natural course of price action which happens on the indices. So we'll have to wait out for what triggers that particular, if in case there is any kind of a market correction or a time-wise consolidation. But I think one should be ready for that.
Right, absolutely. One should be ready for that. Naresh, I'm going to come to you since you're so prepared and, all you want to think about is markets and what is your stock specific action? Anything that you would be looking at in the market specifically today as well?
Yeah, so I'll go to the markets and I'll be having a much more leaner January, more days off. So that's the way I start the year. So first, in terms of stocks, first is about Maruti, a stock which has done nothing in the near term, retesting the levels of 10,000, which was the breakout, and that was the high back in 2018. So a risk-reward trade here, stop loss at 9,800, target price of 11,200. Second is a buy on Crompton consumer. We are seeing a good reversal across the consumer durable space, and this sector as such has been sideways for the last 12 to 18 months. We started off seeing a reversal in Voltas and now a reversal with price volume action in Crompton consumer, where a good base has been made around 250, 300. Expecting a quick move towards 340, stop loss at 300.
Top stocks for the trading session today. I think, Kunal, you've already pointed out that Voltas is one of your stock bets for 2024, but what about today?
For today, I think we'll restrict it towards few stocks which are riding on some decent short-term momentum. So Tata Chemical is the first stock which I would suggest as a buy. The stock breaking out on the previous week above that 1,075, 1,100 mark. So would suggest a buy with 1180 as a target for Tata Chemical, stop us at 1,070. And IRCTC is the other stock which has shown a V-shaped recovery. I think it's a very strong chart in the making. Hopefully breaking past about the 900 could trigger another bout of rally for IRCTC. So would suggest a buy with 980 as a target, stop us at 840.
Okay, those are the bets that have come in there as well from Kunal. But, let's actually bring on what Somit also, as always, he's here. And Somit, I know it's a dull day, nothing exciting, but QSR...
I like how you said, as always, he's there.
As always, he's here to tell us. No, he's here to give his knowledge and gyan on what is happening. What is it that today is QSR? Nothing exciting that we've seen happening since the festive season
maybe
as well.
you guys didn't order much on the last
I
week
was
of
ordering.
December.
I don't know who didn't order.
Tweets from Dipinder as well as other people. They were all talking about how it was the highest number of orders that we have seen and the kind of, I think some of the data should come up on the screen. What India was ordering, what was the kind of, okay, so really wanted to attend that party in Kolkata where someone ordered just 125 items in a single order. So that's the kind of party
I'm
India
just
is
wondering
having.
what is there.
8,422 orders were placed in a single minute. Imagine.
That's
and
a
you're
lot
talking
of
about
work.
QSR.
That could be Instamart also. Swiggy Instamart or Zomato Blinkit could be.
Fair enough, but still 8,422 orders, definitely some platform fee and handling charges coming there when you're saying
That-
QSR
yeah.
is not doing that well. Is
No,
that what the brokerage is saying?
platform fees for Zomato. QSR is for Jubilant Food, Westlife Food, Devyani,
I am paying
Sapphire
some
restaurant.
handling fees in I think Zepto or Blinkit also. I think I have to check.
Yeah, Zomato and Swiggy might be earning, but these companies are not. That's what the
Fair,
brokerage is
fair.
at least suggesting. At least their channel check is suggesting. They are saying that Q3 sequential demand improvement has not been as better as what the street was expecting, despite the fact that it was the festive season and major sports event was also there. In fact, they're saying that the last week of December, which is generally the highest revenue generating week for the QSR companies, demand continued to remain soft even at that time. Now they're saying that Domino's and Pizza Hut are taking steps to increase consumer footfalls and through promotions, but what they are actually seeing in the market is that consumers continue to downtrade, and hence there won't be any much improvement there. But when you compare Pizza Hut with Domino's, they're still expecting Domino's to fare better because of their superior delivery model. When it comes to burgers, they're saying that the impact would be much lower compared to what it would be for pizzas, but it would be still a flat growth, so not much growth that we are seeing. But if you see the valuations of all these companies, they are still currently trading near their 5-year average. Jubilant Food is trading at around 72 times, Westlife Food is trading at around 75, Devyani and Sapphire anywhere between 66 and 79, while restaurants brand Asia is still a loss making. So there's no comfort on the valuation side, but on the earnings side, their Q3 is not expected to be as better as what the street was earlier expecting.
Okay, so not as great that as what the street was expecting. The festivities and the World Cup didn't cheer the market as much, but hopefully the New Year orders is something that might have fueled their revenues a bit in terms of the orders that we have seen from all of these QSR companies. But what about the credit growth in the system as well? Because banks were the rank underperformers of the year gone by. But if you look at the trends in the last 2 months, at least in terms of stock prices, they've outperformed the index. Is there any recovery or actually, let's say acceleration perhaps in the credit growth?
Well, credit growth for the month of November data that we have is pretty much stable, and most of the brokerages, if you see, they have continued to maintain their 16% credit growth, what they were expecting earlier. But BofA here has come out with this interesting note. It's actually a preview note, but it's a very detailed note that we are seeing here. And it's first to comment for banks. Firstly, if you see, they're expecting a strong growth and asset quality, which will offset the net interest margin pressure in the Q3. They're also saying that because of high base, the PPOP could be under pressure on a YOY basis, and the key driver or the key delta for bank earnings in Q3 would be net interest margin performance. Now most of them are expecting net interest margin to contract on a sequential basis, but if any bank comes out with an expansion, then or at least they give a sign that NIM compression has bottomed out, then that would be positive for the banks. Now key banks that one should keep an eye out for, they're saying firstly is HDFC Bank. They're expecting a pace of retail deposit growth to grow as a strong growth going forward. They're also saying that the NIM trajectory would be important to track when it comes to HDFC Bank, because they had earlier given reset the investor expectations. For IndusInd Bank, they are saying that consistent delivery across would be the key driver for the bank, because that would give confidence for investors, and focus would also be on the slippages number, because there was a minor miss in the Q2 number. When it comes to Bandhan Bank, they are saying that Q3 would be a make or break quarter for Bandhan Bank to regain investor confidence on earnings visibility. They're expecting some positive surprises from Bandhan Bank. When it comes to ICICI, Axis and Kotak, it is the net interest margin that one needs to keep an eye out for. And when it comes to public sector banks like SBI and Bank of Baroda, they're expecting net interest margins to decline, and the focus will be largely on loan growth with RBI tightening that we had seen in the Q3. And for smaller PSUs, they're expecting better than expected numbers to continue even going forward.
Okay, thank you so much for that, Somit. Surely keeping an eye out on banks as well as QSR as well in trade and banks, something interesting coming in from BofA in terms of a note. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
Vaseem is ready, and I really admire this about Vaseem Saab. Delhi ki thand 1 January Wasim Saab is all decked up, ready with his Garma Garam stock tips for 2024. Garma Garam stock tips. Delhi mein Garma Garam, when I was there last week, it was really cold actually. This word Garma Garam chai, I really felt the pleasure of it.
Yeah, good morning, Nikunj. Wish you and the entire ET team and all your investors a very, very happy new year. And yes, Delhi ki sardi jaisa koi jawab nahi. Or yesterday it was actually a day when you didn't want to come out from your blanket. But that is the way the markets are. We are looking forward to a superb 2024 after rocking 2023. And, like we said, take it with a pinch of salt that you have to also protect your profits. So remember that markets are friendly to those who know how to, fine tune themselves and be disciplined. And the discipline means that in the last 2-3 years, or if you were following Nikunj from August, September, you realized that we are headed higher and you stayed invested. Staying invested is the only mantra, Nikunj. You can keep having bouts of profit booking and so on. But we are in a bull market and we think we are well placed to be an outperformer. But with a pinch of salt that we have already run up a lot, and in select mid caps and small caps, you must have little bit cautionary approach. But no complaints. Look forward to a superb 2024 where good health, wealth and prosperity pertains, and keep watching ET Now to get the best stocks.
So which are the stocks which you would call them have potential to become stock of the year?
So Nikunj, my Diwali pick and most hated name, Vodafone is 11, is now hitting yesterday a new high at 16.5, potential to hit 22. But be watchful that you will never be able to get into these stocks till you realize the potential over a period of time. Similarly, I have been bullish on two other names, IEX on your platform itself at 120, 125. It has just scaled a new high at 170, potential to hit 250. However, like we said, these stocks have been outperformers. You will have to buy a little bit now and wait for corrections, but keep the faith and try and do your research work. Two other big names which I have already given you, SW Solar, which I am very, very bullish to double over this year, and DCB Bank. The reasons are well explained to you, but I think if you have to put new money, then DCB and Solar are two stocks which we think will double. As a disclosure, all these four stocks are in our portfolio, and we remain very, very optimistic on this space or the perspective of the businesses in its own individual state.
Let's look at DCB. Why now? Why was this not on your radar last year same time?
Correct. Now, when the promoter starts to infuse capital, he's seeing more bullishness. He's putting his money where his mouth is. The bank may have been a relative underperformer for no specific reasons. But the flow of money into mid-cap PSUs and PSUs basket has seen a large part of the mid-cap private banks being underperformers. Trading at 0.9 time price to book, having a book of over 1 lakh crore. I think, as we are seeing the runaway success in two-wheeler, three-wheeler, gold loan, agri loan, all these businesses fit perfectly into DCB Bank. And Nikunj, if you went, in Bombay itself to a couple of commercial centers, DCB Bank is actually garnering a large part of the MSME and retail flows. So I think this bank fits all the parameters perfectly to be an outperformer in 2024. There is hardly any risk as it is capitally much more adequate than needed. A promoter, as a disclosure, has just putting money at 137, the highest rate in the last 1 year. And aside from the price, I think the business franchise is doing extremely well.
Okay, that's on DCB Bank, but let's keep it with the New Year theme then. And which India Inc. group actually added the most value for 2023? My colleague Snehi has actually done an interesting breakdown on this and a read on this. So let's go across and listen into that exciting chart that she's picked out.
Well, yes, 2023 has been a stellar year for the benchmark indices. A 20% uptick on the Nifty and Sensex indicate what a good run the market has had in the year gone by. Let's also take a look at which group of stocks contributed largely to this overall rally and grew the most. TVS Group of stocks tops the list with a 70% rise in market cap on a year-to-date basis, with Sundaram Brake, TVS Motor and TVS Holding contributing the most to this hike. Now there's a close tie between the Goenka brothers, Sanjeev and Harsh Goenka, for the second spot. Sanjeev Goenka's group market cap expanded 63% and the RPG Group's market cap rose by 60% YTD, with stocks like PCBL and Firstsource and Zensar Tech and RPG Life contributing to the hikes respectively. The L&T Group is next on the list with a market cap expansion of 60% as well, with L&T Finance Holdings and L&T leading the gains. Murugappa Group comes next, aided by stocks like the Cholamandalam companies, and Birla Group follows, aided by Vodafone Idea and Ultratech Cement. Now the HDFC Group market cap also expanded by 40%, followed by the Godrej and Jindal Group of stocks. Tata Group's market cap expanded by 35%, led by Trent, Tata Investment and also its first IPO in almost 20 years, Tata Tech. Now Mahindra, Hinduja, Wadia, Bajaj and ICICI Group of companies come next in line. But what's surprising is at the very bottom of the list you have two of the richest group of companies in India. That is Mukesh Ambani's group of stocks as well as the Adani Group. Now the Mukesh Ambani group of stocks added only 11% market cap gain, and the Adani Group was stunted by the Hindenburg allegations earlier this well and shrunk its market cap by a whole of 34%.
You know, it's just a coincidence, but we've historically seen that even though, let's look at Tata Group of companies, very diversified, steel, steel, technology, consumer, hospitality, which is hotels, and across the board, when the tide turned for Tata Group of companies, they went up like a bazooka. Similarly, TVS Group of companies, the split happened, all the companies, they got the ability to raise and take independent decisions. The wheel of motion started. It was a bumper 2023 for the TVS Group. Hinduja, well, largely because of IndusInd and what's happened to Ashok Leyland. But in terms of a pecking order, the Birlas and the HDFC Group had a moderate year, and the Tata Group, even though the percentage may be slightly misleading here because we are looking at percentages here. It's a base which really matters, because for Tata Group of companies the base is very large, but that also on a large base actually gave a 35% return. So Sanjeev, which to your mind could be the group of the year for 2024?
Well, Nikunj, you'll have to take it in two parts. One, the market cap of certain Tata stocks, TCS, Tata Motors, and Tata, the other group companies are far larger than some of these smaller groups. And on a base, it is not easy for Reliance to jump 30% in a year. It does that once in 3 years. So 11% is what Reliance did, which is a moderate gain. And you've seen transition of the business from oil to chemical, into telecom, into retail, into new energy. I think at least till the elections, I would say till March, April, it belongs to Reliance and Adani. Because if the index has to do well, the large cap stocks will do much better. Mid caps have seen a disproportionate gain, more so because of low ownership. And we told the groups, actually the market cap of PSUs has gone up from something like 170 to almost 4.5, 5 lakh crore. So actually they have been triplers if you just took the PSU basket. So it's telling you that the market realized undervaluation, and value got neglected in front of growth. Value got a preference ahead of growth. I would say it should be Reliance and the Adani Group in the next 4 months.
You got a preference over growth in the year gone by, and this year is perhaps the Ambani Group and Adani Group that Mr. Bhasin believes is likely to outperform. But Mr. Bhasin, last evening I was just, reading all these tweets coming in from the founders of the likes of Zomato, Blinkit and Oyo. And Ritesh Agarwal of Oyo says that there has been 620,000 bookings made for the New Year's Eve in 2023, and it's up 37% on a year-on-year basis. Do you think this kind of up move that we have seen in terms of the hospitality stocks is just going to get stronger? And would you prefer Indian hotels as one of the top bets within the hospitality sector?
Yes, good morning. Anisha, you are right. Now there is a lot of pent-up demand. There is Bonhomie as a wealth effect of both gold and stocks and real estate doing well. And people have actually spent where they wanted to. This whole unbundling of COVID meant that we don't know about lifestyles, but we want to spend at least enjoy what we have within our means. And that meant slightly going overboard on your, rather than savings, but on your expenses. And who best to spend than in this entertainment of travel, tourism, hotels? I think Indian hotels is a no-brainer still, even though it's an expensive stock. We've had this 2021 was my top Diwali pick at 140, and look where the stock has reached. And average room rates and costs are fixed. But if room rates have gone from 4.5 to 35,000, you can imagine how the money is going. But like I said, these are not very, very sustainable levels in the sense that there is a weather effect, there is a holiday fever. And if I saw what the new launches of DLF are in Gurgaon and beyond, in some of the ancillary areas, they are actually touching the peak. 18,000 rupees a square foot at a sector launch in Sona Road. Now these are telling me that builders are also going overboard on the party, and that may not last, because don't make it so unaffordable that tomorrow if anything churns, then you'll be again stuck with the high inventory and investors lose faith. So we are bullish on select stocks. Indian Hotel is in our portfolio, but we don't want to delve into secondary names. Stay with the market leaders. Indigo, Ashok Leland, and Indian Hotel are three stocks which are a proxy to rising spending on entertainment and the likes.
Interesting names coming in there for entertainment and the likes by Mr. Bhasin. But, as we are welcoming the new year, which stocks have actually got the potential to give us maximum returns? Somit is here with that list, and Somit, take it away.
Well, this list has been curated from the Bloomberg terminal based on the return potential. Now, we have considered stocks that have more than 10 analysts covering that company. So, there are around 298 stocks, of which 141 are expected to give a negative return in 2024. 11 of them are not expected to give any return, while 146 of them are expected to give positive returns. Now, among this 146 stocks, if you see, only 10 of them are expected to give more than 20% return. When it comes to the stocks that are expected to give return anywhere between 10 to 19%, there are around 65 stocks, and 71 of the stocks are expected to give return of anywhere between 0 to 10%. So not many stocks that are expected to give strong returns, at least as per analyst expectations. Now, among top 5 stocks, if you see, Paytm tops the list. Analysts are expecting around 59% return from Paytm. Now, this is because the share price fall that we had seen recently because of their scale down of less than 50,000 loans was more than anticipated as per brokerages. Along with this, brokerages continue to remain bullish given the fact that it has a strong addressable, large addressable market and strong growth plans going forward. When it comes to HG Infra, analysts are expecting around 34% return potential on the back of strong order book, segment diversification that we have been saying, and healthy monetization of its HAM assets going forward. When it comes to Fusion Microfinance, it's the improving asset quality, strong profitability into the microfinance segment. It's lower credit cost, stable management, and lower attrition, which will lead to its scalability as per brokerages. When it comes to Suntech Realty, is the transition to its transition to the asset light model of the company, new project launches across various price points, and the strong demand that we have been seeing in the real estate demand will lead to this kind of returns. And lastly, when it comes to PNC Infratech, it's the asset monetization that is expected to be a game changer for PNC Infratech in 2024. Along with this, its diversification into other segments and its a shift to value-added products and engineering goods would be the key triggers for PNC Infratech in 2024 as per brokerages.
Return potential of 59%. I don't know. I really don't know. HG Infra, Fusion Microcap, and PNC Infra. Bhasin saab, Paytm, can it give a 60% return? I mean, that's the consensus number which we've got for Paytm, because for the year gone by, the stock frankly has done nothing. I mean, I'm using 20% as the benchmark. If you've done 20% last year, you've underperformed. If you've done anything above 50%, you are with the crowd. If you've done anything above 70%, then you've outperformed in the small and the mid cap space.
Yeah, so Nikunj, firstly, we have Paytm in our portfolio. We are adding it at these prices on a SIP basis. Let's take it with a pinch of salt that it was 400, it went to 1,000, and in the last month it has corrected there from that 900 level to 600 level. I am not saying 59%, I am saying 100%. This stock will double, and it's in your day-to-day lives. It's just a matter of time as the transition moves. Their QR and their technology is unbeatable, and the number of the book size which will their NBFC arm will gain more traction because the transaction quantum will become large. So I am extremely bullish, but I am also invested in this stock. So I have a biased interest. My clients are going to look at the next 3 years, not maybe this year. But I don't rule this stock going to back to that 1500 level maybe in the next 2 years. And if Bonhomie remains and we get a better traction on the book size, their QR, volumes growing, this stock can be a huge outperformer. Along with that, let me also add, I think another pick from my mid-cap stable is Canfin Homes. We've seen the transition of most of the mortgage companies move into digital, and the pace at which Canfin Home has become technology driven is amazing. From my recent interaction, after that one-off fiasco of a couple of accounts and some problem on their people on their payroll taking advantage, which led to a wrong deal and some misappropriation. It is now fully transaction. All transactions are on technology, which means the head office monitors each and every disbursement. And I think the way forward for if you are seeing bullishness on real estate, then Canfin Homes is a stock which perfectly fits from 777 going to 1,000 rupees. That would be my mid-cap bet. And I think all the parameters are firing on all cylinders for this stock to be the best performing mortgage company stock.
Mr. Bhasin, on that note, we let you go, and here's wishing you the best in 2024. But we'll want to extend those wishes to Sandeep Sabharwal as well. He's joining us on the show as well. Sandeep, you're joining us from that cruise or what? Because you had talked about how you had plans to celebrate New Year's on a cruise.
Not the New Year's, starting the evening.
Okay, so we'll hopefully perhaps you'll tell us how it was. But talking about the year, what do you think is going to be the big trend to watch out for in terms of, let's say, a sector or a theme? Anything specifically that you're watching out for?
First of all, best wishes to all your viewers and all of you also in the studio. I hope everyone has a great year, 2024. 2023 was very good for investors. It was unprecedented in a way that no one at the beginning, if anyone says that they expected that mid-cap index will rally more than 45%, small caps by more than 55%, I think they'll just be lying. No one expected what happened. So I think market surprised us, and what will happen in 2024 is tough to say. But I think what's very clear is that the economy is on the ascendance. The economic growth trends for the longer term seem more clearer now what they were a few years back. And that by itself is long-term good for equity investors. We now stand at a place where at around 120-125% of GDP in terms of market capitalization, the markets seem to be stressed. So some giveaway, if it happens, then market becomes more healthier. In terms of trends, I think clearly we've seen that the investment cycle and its pickup and a trend towards green energy and what many companies are doing in terms of trying to the overall theme has to be on the investment side. Also, companies are diversifying towards more renewable things, etc. So I think that's something where we should see continuous investments, and some ideas could come up on that segment. Except that, the economy year on year doesn't change so much. So I think many themes which did well in 2023 could continue to do well in 2024, but not maybe at the same pace.
You would not change the basic construct of your portfolio, because your portfolio is tilted towards names like Indian Hotels, L&T. I think it has a Mahindra and Mahindra. You will not change. It has got some banks. You will not change that construct of the portfolio.
Overall, not right now. We have around maybe 15% plus minus kind of cash across different category of portfolios, which we'll be looking to redeploy. But then, of that, there's nothing changing. I think portfolio has to be more domestic focused, and India will do much better than the global economy. So externally facing sectors might not do as well as the domestic focused sectors.
Okay, point taken. So those are the top recommendations coming in from Sandeep Sabharwal. But Naresh, I wanted to get a chart check going for BHEL in the last 6 months rather. That stock has seen quite a bit of an up move, and today, of course, that stock might be in focus because it's one of those companies which is L1 for a 19,400 crore order. What's your take on the charts of BHEL now, almost touching 200?
So getting into a very stiff resistance area, the 200, 210 levels. Because if you look at it, the last time the stock really rallied was 10 years back post elections. That is the time the stock went up to this 119.95, but there was absolutely no performance post that. After those levels, the stock went down all the way to 20 to 40 levels multiple times. So now we are getting into a stiff resistance. Bullish on the stock, but at current levels, the risk reward is not great. And if it is a big gap up today, the risk reward is a case where you actually want to book profits rather than to buy. Overall, long-term structure has changed right from the time it crossed that 80-100 mark. In the short term, it could be overrun if it goes to 200, 220 today.
Sandeep, there are a lot of small themes which are now sprouting up. Religious tourism, luxury cars, airport infrastructure. Now, these are small themes, but they have potential to become multi-year themes. I mean, we pretty much know that how religious tourism has come back now. We pretty much know that, 74, 75 new 55, 60, 50, 60 new airports would be built in next couple of years, and there's a parallel economy which will get created. Anything interesting which is small but has potential to become big in coming years, it may not be the best trade for 2024, but if you buy now, you could potentially hit a multi-bagger in 24, 25 or 26.
So Nikunj, at this stage, tough to comment because I haven't really tracked any of these teams per se. What you're saying is right, but I think that could benefit some of the incumbents only. So not really very clear on what could benefit because of this.
Debate, Sandeep, whether one should buy ESG dominated companies or one should go back to the traditional businesses. For example, 2022, if you were anything which has got to do with ESG negative score, that did not find fancy with the market. 2023, reverse happened. 2022, the market mantra was जहाँ से धुआं निकलता है लेने का नहीं. 2023, जहाँ से धुआं निकलता है, that's where gains were. What is your view on some of these so-called ESG related businesses for 24?
So ESG, I think, is overhyped. I don't think that it plays so well. It's good to create. So we see whenever this phenomena happen, many companies also change their names to show that they are more on the ESG side. Some finance company will change its name to green finance and all of these things. But I think these are just antics. They don't change the business fundamentals. I don't think that ESG investing as a theme is as big as what people thought it will be 2-3 years.
Let's just switch focus to the auto sales numbers that will be coming out for the month of December as well. And what are we expecting this time? Will it be on high speed or will we see a bump? Shrishti joining with us to give us what are we expecting this time from the December sales numbers. Shrishti?
If we talk about the segmental performance, then yet again the two-wheelers are expected to shine bright in this particular month. So the discounts are actually low on a YOY basis because post the festivity as well, the demand continues to be quite robust for all these companies is what we are gathering. Other than that, from the passenger vehicle sales, the demand is expected to be a bit moderated because it's quite a trend that we are seeing for the past couple of months now, and yet again a bit of a moderation is expected. From the commercial vehicle space, we will see a bit of a pickup on a sequential basis, that's on a month-on-month basis. But the key to note is that though MHCV sales could be quite steady, but it's the bus segment that is seen to be doing well. Companies like Ashok Leyland, Tata Motors, they have all announced that they have got fresh orders in the bus segment. And lastly, from the tractor division, because of the monsoon deficit, we are expecting a double-digit decline in the sales on a sequential basis. So the strongest among these segments could be the two-wheeler, but the
weakest link could be the tractor sales this time around. Let's move forward and shift focus to the company-specific performance. So from the passenger vehicle space, we are expecting a bit of a single-digit decline for the likes of M&M Auto as well as Tata Motors. But for Maruti Suzuki, it could actually be a double-digit decline, where we are expecting a 18% decline on a month-on-month basis. Why so? Because the company's sales and the plant shutdown was also planned, and the companies has been increasing the discounts to get rid of their inventory. Other than that, from the commercial vehicle segment, like we highlighted, that on a month-on-month basis there could be an uptick. For Eicher Motors VECV, there could be a sales jump of 26%. For a Tata Motors commercial vehicle, it could be a flattish kind of a growth. Sales number expected to be close to 29,000 of units. But lastly, from Ashok Leyland, there could be a jump of 14% on a month-on-month basis. From the two-wheeler segment, all eyes will be on this, because for Hero MotoCorp, we are expecting a bit of a moderation. But for Bajaj Auto, on a YOY basis, if we see, then there could be a jump of 29%. Interesting to note that this time, TVS Motor sales is not expected to be that great, because we are expecting a decline of 23% on a YOY basis. So this could be an exception, and we will be watching out for that. But lastly, from Eicher Motors Royal Enfield, a jump of 12% is what we are expecting. And lastly, from the tractor sales, like we highlighted, that a double-digit sales decline is expected. So we will be focusing on that. For M&M Tractor as well as the Scots, we are expecting a 21% decline on a month-on-month basis. So these are the expectations from the December auto sales data. Back to you.
Okay, point taken. So those are the expectations of the auto sales expected today. But Kunal, last year, a clear outperformer was TVS Motors. And of course, Tata Motors also did well. And that's one stock that you flagged out at the start of the year as well. This year, which is that auto stock that you would want to place your bet on?
Difficult to pick one auto stock, I think, but if I have to pick an underperformer which is trying to look a bit stronger, I think that will be Hero MotoCorp. That looks attractive at current levels. I think that's a stock which had been for I think the 7 or 8 months of 2023 had been a huge underperformer till came a point when the stock break past about the 3,200 levels. I think that was in the month of August, September for Hero MotoCorp, and from there on the stock has climbed up 30%, 35% from those levels. So I think it's been an excellent last 3-4 months for the stock. It's covered up the huge underperformance, at least relatively with respect to the other peers, because most of the other stocks, for example, Bajaj Auto is still is trading at 6,000 plus levels. It's already seen a consistent bout of momentum for itself. Eicher Motors has been looking very strong. I think except for that one phase where the stock had underperformed relatively with respect to the peers, the stock has managed to make a good comeback for itself in the last couple of months. But I think Hero MotoCorp had been an underperformer, so that's a stock which one could be looking at for.
Sandeep, do you think the month of Jan, this time we could be in for a lot of volatility? I mean, A, history tells us that Jan is more down than up. B, markets have run up, at least Nifty has run up 10% plus in a jiffy. And the earnings season is not likely to keep in pace with what the reality of the market is.
Yeah, so when markets run up so much, then earnings become very important. Like most of the cases, earnings are not so important. But I think after such a sharp run up, then the earnings have to justify what the market move has been. And to that extent, you are right that wherever there is even slight disappointment, we could see significant sell-offs. So I would tend to agree that this result season will be more volatile than the earlier ones. Now, so the key for investors is to try to look out for opportunities as the results come out and as some disappointments create sell-offs in some stock we might be interested in. Overall, my view is that first 2 months of this year, we should be a bit careful. If there is a decent correction, then that could give buying opportunities.
Where would you look at locking some gains? I mean, would you be looking at locking some gains in PSUs? Would you be looking at locking some gains in defense and railways? Where would you lock some gains?
I think overall PSU basket, people should look at locking in some gains because many stocks have moved up without much change in fundamentals. And even for companies which are winning orders, etc., you need to see the profits also. Most PSU companies used to trade at single-digit valuations 2 years back. Today, a majority of them are trading at between 30 to 50 PE ratio. So things have changed in defense, in railways, for sure. But for the overall basket, not so much that the valuation change should be so drastic. So I think there's too much of retail investor participation in this segment now, and there will be some disappointments in 2024 in this segment, I think.
Okay, point taken. In the meantime, Kunal, I also wanted your take regarding the markets and the seasonality because, Vendes has taken out this data and they talk about how a 48 months time cycle has worked perfectly in the last 28 years. And every time in 48 months, there is a big top or a bottom which is made. What do you make of this chart which is there on the screen? Because it looks like we made a top for the near term. Would you agree?
Well, according to this chart, yes, the seasonality factor does play a lot. So the JFM is generally considered to be a time cycle period where the markets typically make a top, whether it's in 2008, 2020. There have been many instances where we've seen the indices making a top in that first 3 months of the calendar year. So yeah, I think historically the connotations and the reference points for the time cycle has been that a major cycle generally ends into going into such a kind of a strong fierce rally and then starting off into a fresh calendar year for itself. So historical connotations have been working almost with a strong accuracy period.
Right.
Yeah, Bini.
Sandeep, I'm just going to come to you as well. And I want to also know, just in terms of, you were talking about PSUs, and selling and booking some gains in PSUs as well. But, would you find still some value that is left in some of these other names or, something like an REC that is also very good dividend bet as well? So what do you see in terms of that?
I think REC PFC have got significantly re-rated based on assumptions of better asset quality and significantly high disbursement growth. So at these valuation, these stocks are trading at valuation of large cap private sector banks, similar to them, like maybe some discount here or there. So I personally think they deserve this. So people should be careful after such straight line moves.
Yeah, those moves are a bit heady, aren't they? Thank you, Sandeep, for making time and speaking with us. And here's wishing you all the best in 2024. May it be better and brighter for you as well. Okay, time now to read the pre-open rates as well. The markets are hinting that they are going to start in the green for the Nifty, but the Sensex is a bit tempered, so it's going to be a very flattish to a bit of a muted start for the markets. Let's let the rates settle because it's at 907, 908 when we'll get the real trends from the pre-open as well. But time now to take the mid-cap bets from our chartist. Naresh, what's the top mid-cap idea that you're spotting for us this morning?
So, continued like DCB Bank, that's the only bank which has not really broken out in the mid-cap, small-cap space. Volumes have increased over the last 1 month. We've seen very large volumes come up in the last 1 month. Gave a breakout above the 125 mark, retested that 125, again made a fresh move towards the recent swing highs. A good risk-reward trade here, stop loss at 128, target price of 160.
Kunal, what's the top mid-cap idea?
So that'll be a buy in L&T Finance. That's a stock which I think on Friday managed to come back into a fresh swing breakout high above 160 plus mark. So would suggest a buy with a target of 175, stop loss at 160.
Okay, point taken. But let's do one thing. Let's take a short break on the show. When we come back, we'll track the pre-open rates.
Welcome back, and you're watching the markets on ET now. Let's get in some updates that have been happening on the global front as well. And now the Iranian-backed Houthi militants have once again attacked Maersk container vessel, prompting the company to pause sailing again on the Red Sea. So far, the pause has been set for 48 hours and no indication of fire was reported. Also, shifting focus to the latest comments from Chinese President Xi Jinping. While addressing the nation marking the new year, he said that China's reunification with Taiwan is inevitable, and this, remember, is a stronger tone taken versus last year. Comments coming just ahead of Taiwanese general election as well. Also, staying with some of the Chinese sales home updates that have come in from China, the sales have risen in December, underscoring challenges to arrest the country's property slump. Now, the value of new home sales amongst fell almost 34.6% versus 29% decline in the month of November.
In the meantime, Europe's longest-serving monarch, Queen Margaret II of Denmark, has decided to step down on January 14th. Remember, the 83-year-old Queen ascended the throne back in 1972. Back home, the North India feels the winter chills. Delhi has actually reported the warmest December in 6 years. Average temperatures remained above normal. Officials said that cold day conditions are likely at isolated places today, with a yellow alert in some of the places. India has recorded a 22% rise in COVID cases this week, with the tally in the past 24 hours crossing 800 for the first time in 7 months. Meanwhile, Kerala is logging the highest count, and infections may already have peaked in the state. India is also set to launch its first mission to study black holes. Now, the POSAT mission is going to lift off from the first launch pad at Satish Dhawan Space Center in Sriharikota. So we'll watch out for that launch as well.
Absolutely, and it's 9:05, and it's that time when we bring you what's happening on the D Street. What's the cover on the D Street today? Seems like it's on Dalmia Bharat. That's going to be in focus after some of the sources are saying that company is actually planning to sell off their remaining stake in IEX. Let's go across to Sharad, who's joining in with us to give us more exclusive details on this cover. Sharad?
In focus is Dalmia Bharat, and an asset monetization announcement is likely there. Now, it's expected that the company is evaluating selling its remaining stake in India Energy Exchange. Now, already the selling might happen in limited tranches when it comes to the India Energy Exchange, and the company is having almost 14.93% stake, which is valued at roughly 2,252 crore rupees. In 2021 itself, the Dalmia Group had actually trimmed down the stake, and they had sold 5% stake. And also importantly, the company had recently divested their refractory business as well as one of their retail businesses. Now, the street is expecting that because of the asset monetization happening across the segment and company focusing as a pure play cement company, they're expecting that the net debt levels could come down and could come down below the 2x mark. Importantly, MOCL also came out with this report, and they have given a maintained buy rating, and the target price is almost 2,800 rupees per share.
Oh, well, yes, and that MOSL report pegs Dalmia Bharat as one of the top picks for 2024, so watching out for that as well. But time now to listen in to the editor's take on the January seasonality.
Now, the January data, unfortunately, is not something which could be called as it has supported the bulls. 7 out of 10 times, Nifty has given no returns. Has given negative returns. 6 out of 10 times, the small and the mid-cap index has given no returns. The seasonality, I guess, is also applicable in banks, where Nifty PSU Bank 7 out of 10 years has not given you returns. Bank Nifty 5 out of 5. It's like a toss of coin. So if data is anything to go by, I guess the month of Jan may just be a dull month. You know, what you would ask yourself is that will this entire Happy Diwali rally extend to become a grand 2024 welcome rally? I have my reservations, and I'll tell you why. A, the seasonality is indicating that. B, you must also realize that the market movement has been a linear one, and this will get challenged because I don't expect the earnings season is going to be that gangbusters. There is evidence of slowdown which has happened in consumer space. I've been told that the online sales in December have not been that strong, and you can really feel the pinch that the consumer is slowing down. So I think markets have run up way ahead of what the earning recovery could be. Everybody is betting on the fact that FIs will come. So it's becoming more like a one-trick pony. So that for me is the setup. Seasonality is against you. FIs, I don't know whether they will come back or not. If they come back, we'll welcome them. But markets are too much dependent on them. And then I think earning season is not going to be that grand that it will really lift the markets higher. These are the 3 factors I would like to point out.
Okay, but let's just look at the December auto sales numbers that have just started coming in. The first one coming in from Bajaj Auto as well. Motor sales at around 2.83 lakh units is coming for Bajaj Auto this morning. And obviously, other than that, we have some vehicle data that has come in as well. Its export data is at 1.35 lakh units according to the reports that have come in as of now as well. So keeping an eye out on Bajaj Auto sales numbers as well. Looking at other numbers that we have, the total vehicle sales are at at 3.26 lakh units.
That's a little lower versus the expectation, because the total expectation for total vehicle sales was 3.62 lakh. So the total number coming at 3.26 is quite a bit lower than what Street was expecting. So that's the latest as far as Bajaj Auto and some of the auto sales are concerned. But what about the index calls?
Absolutely. So, you know what, the index calls are there this morning, and Pharma experts, the Nifty calls from Kunal Botra book part profits, while from Naresh it's a hold. That is there for the Nifty calls, while for the Nifty bank calls this morning, also Kunal has said book part profits there, while Naresh has said continue to hold. So yes, that's the views coming in from the experts on the index calls this morning as well.
Okay, so for the pre-open rates, it's as flat can be as far as the Nifty and Sensex is concerned. No surprise, the volumes are usually very low on the first day of the year. It looks like it's going to be the trend at the start of the day as well. Just quickly marking some of the pre-open individual rates. Jubilant Pharma is likely to open with a gain of around 5%. Okay, those are the visuals actually coming for you. I'm guessing it's at Sri Harikota which is happening. So hopefully another successful launch. It was a very, very strong year 2023 for ISRO as well. We had landmark kind of launches happening, and hopefully 2024 is going to be better. That first solar mission as well is hopefully going to be successful. So we'll see more of all of that in 2024 as well. So looks like another strong launch coming in from ISRO. But let's see whether the launch of the markets is going to be strong or not. As I was pointing out, the individual stocks, Jubilant Pharma, 5% higher. SJVN is likely to open with a gain of around 3.5%. BHEL is the other one that we're watching out for. No big losers to start off the day with, but it's just that Prestige and IFL are showing just a mild red. So we'll watch out for that. Some of those names need to be watched out for. But Kunal, Pharma was trying to make a bit of a comeback by the end of the year. We saw a bit of a bounce back. Are there any individual charts that look the most interesting? Because the likes of Aurobindo Pharma, Loris Labs, they were massive outperformers.
Yeah, I think even Glenmark Pharma did pretty well for itself, in the previous year in 2023. But I believe there are other names which are also coming up on the charts to be much better. Granules, for example, I think is confirmed a very strong breakout on the multi-month, multi-quarter chart. It's confirmed a flag pattern move or flag pattern completion for itself. So that could be one stock which should start to look very attractive from a medium to long term play. Zydus Life is the other stock which I think has done reasonably well. The stock has also recovered from the previous major lows of I think 450 approximately a couple of quarters back. So that looks attractive. Glenmark Pharma, even after that last 3-4 quarters of a strong rally, I would still believe that about 800 levels, it still looks very attractive for a potential target of at least 950 to 1000 for itself.
Okay, point taken. Just wanted to quickly mark the sales of Escorts as well, because they also are below the estimates and quite a bit of miss actually coming in. The December sales for Escorts stand at around 4,536 units versus 6,511 units, which was estimated. So a bit of a miss as far as Escorts is concerned, but the stock is holding up okay. Actually, that's a question I want to put to you, Naresh, from the auto pack and the ancillaries more importantly. The battery stocks, the likes of Exide and Amara, they have been talking about huge investments into lithium and battery, and that's expected to be a big kicker in FY25 going forward. Chart-wise, would you like to bet on either of the names?
So Exide looks very interesting, because if you look at Exide, the stock actually went through a deep correction from a high of almost 300. The stock went to 130 back in COVID as well as in 2022. It went all the way down, made the same bottoms and recovered, and now we are back above the 300 mark. So that's a high crossed of 2018. So clearly the trend has changed and momentum is strong. So Exide looks promising. Amaraja is interesting as well, but the case is it's Exide, given that it's hit a new all-time high, looks pretty promising. And a lot of auto ancillary names have also started showing a lot of strength. So even a Bosch has started making multi-month highs. You have a lot of sideways names like Endurance, Varroc, etc. showing momentum. So overall, the auto ancillary pack looks interesting. Exide still remains a buy at current levels.
It's a 20,000 rupee stock, a 20,000 plus stock, but it has come out after almost like an 8-year breakout. And typically the point which I think Naresh always emphasizes on is that look at these long charts. When stocks they consolidate for years, Indian hotel consolidated for maybe almost 10 years. Then it came out. Similarly, you saw consolidation in PSU banks for years and then they came out. IndusInd Bank consolidated for years before it came out. So that's really been the positioning of the market. So today you may say, okay, not too much of activity, not too much of crowd. It's 9:15, wake up India, 2024 has started. When markets are warm, Kunal, I mean everybody will come, right?
Yeah, absolutely. You have
कहने की बात है कि New Year कर रहा है. Nobody will give a chance to make money.
But the last couple of years, trading has become so easy because it's not no more a call and trade. You can be on vacation, you can spare those 5-10 minutes.
You trading when you on holiday?
No. I'm saying that.
Were you trading on holiday?
No, I was not.
Thank you. Complete.
Yeah, complete detox.
Complete detox. Makes sense. All right. Good morning, India. Happy New Year. First rates 2024. And there you go. First rates of 2024 after a gangbuster 2023. It's a red tick, or I would say it's a flat tick. The first rates, I think the bulls are also taking some time to warm up. And, the warm up sometimes takes time. 2023 has been a sprint. It's been more like a 100-meter dash in small and mid-cap stocks in the last couple of weeks. Mid-cap index is off to a good start. The market breadth is looking promising once again. And in terms of the broader assortment of the market, I think autos is where you will see some news-based action. Let's look at the linear movers of 2024, 2023. Are they starting off to a good start for 2024 as well? Which includes names like Tata Motors and TPC stocks where the move has been linear. 20% is what the index did for the year gone by, 50% plus is what the small cap index did, 40% plus is what the mid cap index did. I mean, these numbers are not going to repeat themselves. So if luck paid money in 2024, I think it really could be skill, which will be the differentiating factor.
Yes, skill is what you will definitely need, but the advance decline ratio for now is very, very healthy. Almost 1,500 stocks advancing to 300 declining. It's Pharma which is starting on the front foot. So Glaxo, Gland, Dr. Reddy's, these are some of the names to watch out for. And for now, at least the PSU banks are continuing their bull run. So Bank of India, Central Bank, these are some of the names. Though the heavyweights, the likes of Axis Bank, Kotak Bank, ICICI Bank, HDFC, these are the rank underperformers and these are the names which is actually dragging the Bank Nifty lower. It's not a great start for the Bank Nifty today. Talking about individual names, as we are pointing out, BHEL merits attention. There's a 5% surge on that stock. Large trade also happened in terms of the stocks that changed hand, and that is on account of the Talabira order of 19,400 crore that is in focus. You also have Jubilant Life higher by 6%. Realtel Corp on account of an order win is higher. Inox Wind is the other one, and Jyoti Labs, Captain Points. These are some of the other names which have started with good gains. On the losing side, Safari Industries, Cholamandalam, Sonata Software, Kalpataru Power. These are some of the names which are seeing some amount of profit booking. From the broader markets, I also wanted to see what Kaveri Seeds is up to, what a KPI Energy is doing, because these are stocks in focus on account of news flows. So yes, Kaveri is high by 7%, though KPI Green is down about in the trading session. So not big individual movers, but yes, it's the market which is doing quite well. You have the advanced decline ratio at around 1500. But time now to take the first trades from Kunal as well as Naresh. So Kunal, what's the first trade?
Well, we'll still look at large cap names. HDFC Bank could be the stock, which I think at 1700, 1710 mark looks attractive for a fresh opening trade.
And Naresh, what's your first trade for today?
So that would be a buy on Maruti, which is at a good price point for risk reward. So expecting a bounce here.